If you are serious about making consistent profits from crypto trading this year, then you need to treat crypto trading like a business. Now, as someone who teaches crypto trading, I've come to realize that most people who lose money in crypto trading are people who trade without any trading plan or any structure. And if you have a business or if you own a business, for that business to succeed, you need a business plan or a structure. You don't just start a business and move with vibes. You need to have a business plan for your business to be successful. And this is the same for crypto trading. For you to be a profitable crypto trader, you need a trading plan. Now, for a business plan, you will have things like maybe your target audience, you have the problem you are solving, why should your customer pick you over your competitors. You should also have your marketing strategy and your business goals and how you want to achieve your business goals. Now, having all of these things in your business plan will definitely help you to have a successful business. Now, based on the context of this video, a crypto trading plan is essential for making consistent profit, as trading without a plan or structure often leads to losses. Now, a comprehensive trading plan should include several key components like market focus, capital management, trading targets, risk management, risk to reward ratios, trading plan, and trade tracking. Now, don't worry, I'm going to explain all of these things in this video and how you can create your own trading plan for consistent profit. So let's get into it. Now, the first thing you should have on your trading plan is to focus on a market. Now, as a beginner, if you want to really make consistent profit in trading, you need to focus on a market. You just need to choose between trading crypto, forex, stocks, indices, options, and so on. Now, there are some people who just trade everything at the same time, even when they know they are still beginners. You see them trading crypto, forex, stocks, options, indices, and so on at the same time. You will never be profitable that way. Now, when I started crypto trading in 2019, I was focused on spot trading alone, and I did that for about 2 years, and in 2021, I dived into futures trading. And since 2022 till today, futures trading is the only market I focus on. And now that I'm good in futures trading, I've started to get better at forex trading too. And that is how it should be for you. Focus on just one market, master it very well, and after you've mastered it, you can now start learning others. Now, we have different markets that you can pick from. Like I said earlier, we have crypto, we have forex, we have stocks, indices, options, commodities, and so on. And if you decide to pick forex, you can decide to just focus on 3 to 5 pairs to trade. And by the time you trade those 3 to 5 pairs for about 6 months consistently, you will become so good. But let's, for example, you decide to pick the crypto market. Even in the crypto market, you will still have to pick between spot trading, futures trading, or margin trading. Now, there are some people in crypto trading that just focus on spot trading and they don't even trade all coins. They just focus on, let's say, meme coins, and they still make their money. And there are some people in crypto that they just only focus on futures trading, and that is all. Now, this is the main reason why people are becoming profitable traders today. Just pick a market and put your 100% focus in it and be consistent, and you'll be a master in that market in no time. Now, the second step to trade trading as a business is to determine your capital. Now, this capital is the amount you are starting with. Now, when people message me that they want to start crypto trading, the first question they ask me is, how much can I use to start? Now, to be clear on this, there's no exact amount of money to start trading. It all depends on your financial situation and your level of risk tolerance. And that is why I advise people to start trading with demo trading platforms. For example, we have demo trading on Bybit. And with demo trading, you are not using your own money. You're only using money that is not real to trade. And your aim with demo trading is to practice or test your strategies. So even if you lose, you know that you are not losing your money. But after practicing with demo trading and you want to use your own money, how much should you use to start? Now, for this, the first question I always ask is, how much are you willing to risk? Because the capital you'll be using is a big risk, and this is because you are still a beginner. So you're advised to only use money that you can afford to lose. And that's why I said there is no exact amount of money to start trading. It all depends on your financial situation and your level of risk tolerance. So if, for example, you decide to start trading with $100, what I advise is that you should keep trading with that $100 until you lose it, or maybe until you make a particular percentage profit. Now, what I mean is that if you are trading with $100, don't deposit another money until you've lost the whole $100. And when you are depositing another money, make sure it is money you can afford to lose. What I advise is that you should keep trading with that $100 until you make $40 profit, and then take out the $40 as your profit and go back to trading with $100. But if you don't mind, you can add the whole $40 to your $100 so you can have more capital and potentially make more profit. And that will take us to the next step, which is to know your target. That's step 3. Now, having a clear target is crucial in trading, just like in any business. Your target could be a specific percentage gain per trade or a monthly or yearly profit goal. For example, if you are trading with $100, you might set a target of 10% profit per trade or aim to double your account in a specific period of time. Now, setting targets helps you in several ways. It keeps you disciplined and prevents emotional trading decisions. It also helps you to measure your progress and adjust your strategy when needed. And it allows you to plan your trades better and stick to your risk management rules. Now, just like how different businesses set their revenue targets, their growth goals, your trading targets should be realistic and achievable. Don't aim for unrealistic gains like 100% profit per trade. This often leads to excessive risk-taking and losses. Instead, set small, consistent targets that will compound over time. And remember, successful businesses don't expect their money to double overnight, and neither should you expect your trading capital to double overnight. Steady, consistent growth is the key to long-term success in trading. Now, the next step in treating trading as a business is to know your risk per trade. Now, this means how much of your capital are you willing to lose on every trade. For some people, it is 1%, for some it's 5%, and for some it's 10%. But it will definitely vary from one person to another. Again, this depends on your risk appetite or your risk tolerance. Now, another way to explain this better is to understand risk to reward ratios in trading. Now, a risk to reward ratio in trading is a fundamental concept that helps traders manage their potential losses against their potential gains. Now, here's how it works. Now, the risk to reward ratio compares how much you are willing to risk, that is your potential loss, versus how much you are expected to gain, that is your potential profit, on a single trade. Now, we have different risk to reward ratios. We have 1:1, 1:2, 1:3, 1:4, and so on. Now, for example, a 1:2 risk to reward ratio means you are risking $1 to potentially make $2. So if you are trading with, let's say, $100 and your target per trade is 10%, this means that your risk or stop loss will be at 5%. I hope you get it. Now, for example, a 1:2 risk to reward ratio means you are risking $1 to potentially make $2. So if you are trading with, let's say, $100 and your target per trade is 10%, that means that you are risking 5% for that trade. I hope you get it. So for example, again, let's say you are using 1:3 risk to reward ratio. This means you are risking $1 to potentially make $3. So if you are trading with $100 for this and your target per trade is 30%, this means your risk or stop loss will be at 10%. It's as simple as that. Now, having a defined risk to reward ratio is crucial for consistent profitability, as it helps you to maintain discipline and ensure that your winning trades can offset your losing ones. That is, your profit will be bigger than your losses. Now, generally, the best risk to reward ratio to use is 1:2. So if you're a beginner, start with 1:2, because with 1:2 risk to reward ratio, out of every 10 trades you take, you only need to win at least 4 trades and you're a profitable crypto trader. So now that you understand what risk to reward ratio is, determine how much you want to risk per trade and then pick a risk to reward ratio you want. So let's say you are trading with $100 and the amount you're willing to risk is $5. If you pick 1:2 risk to reward ratio, that means that your target will be to make $10 per trade. I hope you get it. Now, this step alone in your trading plan can help you become a profitable crypto trader in no time. Now, the next step in your trading plan is to have a strategy. Now, for this, you need to decide what time frame you want to trade with. You need to determine your strategy, and you also need to know whether you want to become a scalper or a day trader or even a swing trader. Now, once you decide all of these things, you can now decide how you want to carry out each trade. And if you're looking for different crypto trading strategies to try out, I have a playlist for that. The link to that playlist will be in the description below. You'll find videos on different trading strategies to make money for yourself. And if you are confused on whether to become a day trader, a scalper, or a swing trader, I have videos to guide you. The links to those videos will also be in the description below. Now, the next step to trade trading as a business is to track your trades. Now, tracking your trades is one of the most important aspects of treating trading as a business. Now, just like how businesses keep records of their income, their expenses, their profits, and their losses, you also need to track every single trade you take. And to track your trades effectively, you should record the following. First, you need to record your entry and your exit prices for each trade. Secondly, you also need to track the date and the time you are taking the trades. And number 3, you need to track the strategy you used for each trade. And number 4, you need to track your risk to reward ratio for each trade. And number 5, you also need to track the outcome, whether profit or loss. And number 6, you also need to take note of the market condition and the reason why you are entering each trade. Now, when you track your trades, you can identify which trading strategies are working best for you by analyzing your win rate with different approaches. And you can understand your emotional patterns during trades by noting your mental state when entering or exiting positions. And you can also calculate your actual profit or loss ratio over time, and then you can compare it to the planned risk to reward ratio you have picked. Now, tracking your trades can also help you to spot common mistakes or patterns that lead to losses, helping you to avoid them in your future trades. So there you have it. These are the essential steps to treat crypto trading as a business. Remember, successful trading is not just about getting rich quickly. It's about building a sustainable, profitable system through careful planning and execution. And if you follow the steps I've just explained in this video and maintain discipline in your trading journey, you will be well on your way to becoming a profitable trader. Remember, the most successful traders are those who approach trading as a business and not a gamble. And if you enjoyed this video and found it helpful, don't forget to like this video, subscribe to our YouTube channel for more videos, and don't forget to check out the links in the description for more detailed guides on trading strategies. Thank you for watching, and I'll see you in the next one. Bye.